Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, the failure of BEE fuels the nationalisation debate. Transnet expects its study on the new Richards Bay line by October, and South Africa's mine taxing beats Botswana's mine ownership. Black economic empowerment in terms of black people owning and operating mines in South Africa hasn't been successful to date, says black-owned Kuyasa Mining CEO Ayanda Bam, who puts the failure down to transformation laws and a lack of commitment from some black miners to develop sustainable businesses.
A few years ago, everybody was at the DME applying, getting a license of sorts, And then what since happened, and everybody was trying to sell a license to somebody else. You pay $500, you apply and you do everything else, you look for a buyer after that once you've been granted the license, which was a bit unfortunate. A lot of licenses that were issued to black companies have been unsold basically, for huge sums of money. And it's a pity that the state allowed that, because the intention of giving an advantage to a black company is to make sure that we've got a lot more black people involved in the mining industry as owners and as operators. But suddenly we opened up this market of selling licenses for huge sums of money. Now, the danger with this is 10 years down the line, we're going to be going around saying South Africa has not been transformed. Our economy is still in the hands of white people as it used to be pre-1994. Meanwhile, we have been actually the main culprits.
State-owned logistics group Transnet expects a feasibility study which explores the possibility of building a new railway line through Swaziland to Richards Bay to be ready by the end of October.
We're busy with another study which hopefully can deliver capacity sooner than later towards the 91 and beyond. And that is what's been in the papers perhaps last week. It's the Swaziland through rail in terms of the Lothian link. And in terms of that, it's a 70-kilometer stretch, which if we can upgrade that, there's a feasibility study right now being undertaken in conjunction with the Swazi Rail. So we've got a memorandum of understanding, and we're hoping that we get a high-level feasibility study by end of October.
Free Market Foundation Executive Director Leon Lowe says that the South African government, which taxes mines, is better off than the Botswana government, which part owns them.
The government already gets 50% of the profits in direct and indirect taxes from the mining activity, which is fantastic. It couldn't be in a better position. It's effectively a 50% shareholder in all the mining companies already, and it hasn't had to invest 1 cent for that 50%. And better still, it's at no risk. It shares only in profits, never losses. So it couldn't be in a better position if it, in its wildest and most exotic fantasies. And if you nationalize, not only do you stop getting that 50% of very substantial profits from your minerals, the best possible investment you could imagine, but the world's experience tells you start making losses and you pay in subsidies.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.